Hey there, traders. What's going on? Jamie Setley here. It is December 12th, 2018, and this is the Midweek Strategy webinar. So, before we begin, as always, please let me know that you can see the screen, US dollars up, and that you can hear me. All good, says Pete K. All right, great. So it is time to start the webinar, and as always, it's broken record time in the sense that we are looking at this US dollar chart, and every week I come on here and we look at this chart. Usually we look at this chart and I talk about how insanely divergent RSI is. Okay, great. We've had this divergence going on now for basically 7 months. And it's just getting more and more and more pronounced. So, I showed the chart yesterday, which it's kind of a little different representation, right? Where it shows you what the divergent with the little magenta dots on there, right? And just to remind you, the divergent rules, I do have actual rules rather than just looking at it, right? Because running tests and stuff years and years ago, I realized that it was much better if divergence occurred with RSI below 65 or above 35, right? In other words, you had the trend had completely petered out, so to speak, right? And certainly this is the case with US dollar, euro, DXY, et cetera, et cetera. We've had a lot, if you look at the scans, we've had a lot of divergent readings lately on weekly and daily charts. So dollar CAD, for example, divergent on the highs. Euro recently for, what I think it was 4 out of the last six weeks or something like that. Pound even on the weekly, US dollar on the weekly and the daily a bunch. So yeah, you get the idea, right? So there's that. We've also got the seasonal aspects. We've also got the sentiment stuff. I mean, how many readings have we seen in recent weeks, even months, of sub 10 DSI figures on euro and above 90 in the dollar, right? Cable, I know, as of I think it was Monday, maybe. I believe cable was something like 10 or 11, I'm not sure, but something around there. And that was before the drop yesterday. So you can bet that yesterday was sub 10, and obviously we're getting a big update today in the British pound. So we have that. After all is said and done, all that really matters is the price pattern. And if we look at the near-term pattern, we have an extremely well-defined wedge, right? Essentially from the August high, and you can see right here, 1, 2, 3, I guess a 4, a 5. The wedge resistance is a little bit higher, but we hit this high here yesterday, the May 2017 high, and we've already erased all of yesterday's move. So I guess I would say that an important short-term level is going to be simply the low for Monday. Getting out of the wedge, of course, would necessitate a drop well below there, over the next few days, probably about, I'd say, 12,225, 12,220, and ultimately a break of this swing low on December 4th, which is the month-to-date low, would essentially break the wedge and have you hopefully finally put an end to this disaster that's been going on and just choppy, especially since August. So we will get out of this. It has been one of the more frustrating times, for sure, from a short-term perspective, kind of going nowhere fast, right? But out of these disastrous consolidations does come, extreme kind of trending moves. So that's what we're looking for. Ty saying, will you cover the DXY chart as well? Sure. Why don't we take a look at that right now? So here is the DXY chart. On a longer term basis, of course, it's like, again, nowhere fast, right? Haven't been able to get up to the highs. The US dollar rather than DXY has obviously been the stronger, but that's because of the influence that the cable, the pound has on that. So it's been much stronger US dollars than DXY, which is mostly euro, and cable's been the really weak one lately. So tie to there's really not much for me to say on DXY that I haven't said over the last, I don't know, since August, right? I mean, you're at this long-term resistance line. It's a churn, no doubt about it. And which way do you come out of here? I continue to think, based on the weight of evidence, that it's lower, right? But I've been saying that for a while, right? At some point, the market really forces you to question yourself. I mean, that's the point of all this. And the point of, when I say the point of all this, I mean the point of, the market consolidating the way it is, right? Before it wakes up and you have a big move, right? We've talked about it a lot last week. The dollar, it seems like, has had so many chances to fall. I mean, we've seen, look, gold, for example, there's a huge divergence. You look at a gold chart, let's actually put this is a good idea. Let's put this up. I'm going to compare. Let's compare. Can you do dollar XAU? No, you can't. Actually, let's try this. I want to compare gold, but I want to do it with like the same, as the dollar. So I'm going to put. We'll do dollar euro. There we go. All right. So dollar euro. Now, granted, these don't always move together, okay? But we have this drastic divergence. So when you look at gold, actually, we don't want to do, what am I doing? We want to look at euro dollar. What am I doing? See, this market is making me just kind of batty. Like I'm sitting here and I'm typing dollar euro instead of euro dollar. All right. So, okay, over time, I think it's pretty clear that for the most part, you do tend to have trends where gold and euro move together, right? They're both based in dollars. That's the common denominator. There's no reason to overthink it. It's kind of that simple. So, what's happened here? We had a big low in gold, right? Back in January 2017, we had a big low in euro, right? They both topped early this year. And since then, here's the divergence, right? Gold low in August, euro low in August, but euro's gone back to essentially test that low. And, we're on the verge of potentially breaking higher in gold, right? So have we seen divergences of this magnitude before? I'm sure we have. I'd probably have to go and do a little more work on it. But one that I can think of is certainly back in 2011, right? Gold was going to new highs as the euro had topped in May, and that was in August. So that was, a 3-month lag, right? We essentially have almost a 4-month lag right now. So is it a question of euro following gold? In other words, gold's leading. That I don't know. But what I do know is that you have this divergence, this dislocation. And when I see divergent markets like this, I tend to lean towards the idea that it resolves in the direction of not necessarily gold, but in the direction that the market's coming from. So that means you're coming from lows, in euro and lows in gold and highs in the dollar. All right. Ty says, knowing what is unfolding in Europe makes euro strength hard to bite into. Absolutely. It makes it like completely asinine, right? And like very difficult to comprehend. But, you know, markets, that's what they do, right? I mean, markets aren't supposed to be, oh man, news is bad, market goes down, right? I mean, it's not supposed to be that simple. It's never that easy. Okay. So we'll move on now to our regular scheduled programming. But yeah, I mean, markets are supposed to be kind of ironic and counterintuitive most of the time, right? So let's move on now to something else. Want to look at dollar SEC. We look at this a lot as it is, you know, a pretty good bellwether for the dollar. And I thought today's move is super interesting because, excuse me, look where we reversed off of again. To the tick, okay? Trend line. Ty saying, yeah, it's worse than bad. Yeah, it's kind of disastrous, right? So, and there's another point. The news in Europe is so terrible, but the euro still won't go down. Won't go up either, but it won't go down. You know, we're trading at the same levels we were back in August for the most part. I mean, you know, we traded 113 in August, 113 in October. You had the false breakdown in November, traded up, come back, and we going again, nowhere fast. So, you know, there's the old adage, right, of like markets that won't go down on bad news are actually not bearish, they're bullish. You know, you can make that argument here, but it's also, you know, the market's not going up either. So, you know, maybe it's waiting for ECB tomorrow. I don't know. But let's go to euro now. All right. So the short-term chart, 4-hour chart here. My trigger early in the week was a break up through this median line, right? I said 1430, but it was really the median line. And we had tested it, you know, a bunch, essentially since, you know, the 28th of November. And, you know, false breakout, false, you know, resistance. So I was going with the idea that once you got through it again, that it was finally time to move up to the top of the channel. That was the reason for the trade. Again, a lot of evidence behind our backs in terms of seasonal sentiment. You know, I've gone through this a bunch. No reason to harp on it. But, you know, it was another false breakout. So the drop yesterday, basically low tick, was exactly 2 legs down. And yeah, you're still holding this channel. So, you know, if you forget, yes, there is a parallel just above the median line, absolutely. So if you put that there, certainly. Ty says that, yeah, good point. But so if we, you know, get back through this, I think it's probably a pretty quick trip up to 1550, which is going to be the top of the channel. Now, again, ECB tomorrow. We've seen December ECBs. We have seen some really big moves December ECBs. This is the longer term chart. Again, it's really hard for me to be bearish on this chart. Parallel, the neckline. It's so easy when we look at all these intraday charts and everything to forget just how, you know, how big, you know, a support that they were at, right? You know, so again, the August low, I thought that was it. We were on our way to the races, but back for more, right? And so the longer this draws out, the bigger this base becomes, the more important the move coming out of it will prove, in my opinion. So this makes it pretty clear, right? Now, I said we've had some pretty big ECBs. This one right here. December 3rd, 2015, that ECB, 105.40 to 109.80. You had a 440 pip day. Okay. And considering you were coming from 105, it was even bigger percentage move. The market was in a somewhat similar place, right? You're kind of easing into lows, right? Easing into lows. What we have back then, an October 14th high, we had a September 20th, and we had an October 16th high this year. So you can see the seasonals at work when you look at stuff like this, right? It's like, just because a market's not, trending doesn't mean there aren't seasonals at work with certain turn dates. So I'm always aware going into December ECB that you can have some pretty wild stuff happen. If you remember back in December of 2008, this was what happened. You went up 2,000 pips. So I'm always reminded of the Decembers and the potential for completely outsized, surprising moves towards dollar weakness, just because I've been a part of it, and history has quite an influence on you. So all that said, here's your picture of euro. We're sitting on massive support. We've been sitting on massive support since August. We've got gold going higher. We've got the divergence with euro, blah, 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 blah. Now, that said, I don't want to be surprised, especially because it's ECB, if the market breaks to the other side, right? So if we end up breaking to the downside, where are we going? Well, I put that, these two levels yesterday. So this is just based on this parallel and extend the parallels down, right? You can, oops. This is pretty, this method's pretty good at identifying lows, right? Extend it off the low, you hit the low, okay? So the two levels I was talking about, because if this is indeed a triangle, in other words, A, B, C, D, E, then you're looking for two extensions, 127.2 and 161.8. Okay, and that's 111.45 and 110.56. Again, I'm not in that camp, right? And the fact that I'm not doesn't mean anything, right? All I'm saying is that if we do get a bearish resolution to this range, I want to know where we should be looking, okay? And those levels are the two I just mentioned right here, right? So we start to break down. We'll see what the intraday charts look like. I'm not going to want to be chasing, I don't think, any sort of weakness, but it depends on the intraday setup, right? If you get a clear, high volume level and you have a, shot at a decent, well-defined entry, then fine, okay? But I don't want to be, sitting here predicting the next move, because frankly, I'm in the dark on that, right? You break out of this, as we looked at that 4-hour chart, then, we're headed to 1540 and probably a lot higher. So that's where my head's at on euro. Again, we're taking it here one step at a time. Let's move to the British pound now, which, by the way, we are on a DeMark buy countdown. So we're on a 12 right now, okay? To show you various DeMark buy countdowns that have triggered in recent years. One right here in Jan 2015. You got a good move off of that, went to a new low, and then you had a much bigger rally. Right here, 2012. That one, pretty damn good. This one, absolutely perfect. That was September of 2011. This one, perfect, July of 2011. You got to go all the way back to 2004 Okay, it was a good, good bounce, and then you went lower. April 2003. So you get the idea. We have, we're not guessing here, right? We actually have the potential to have a real standing low. Okay. So with that knowledge, we can go to the shorter term chart here. So I just put on Twitter that you're probably going to have some resistance right here, right? So we got 2660, essentially up to 127. Square root level is 2686. Week opens 2703. Ty says, what are the extreme to mark readings? 13, 14 question mark. So it's called a, I don't have time to go into the whole thing here, but what it is, Ty, is it's a way of trying to identify exhaustion. Okay, and Tom DeMark developed a system for identifying turning points in the market, and there's two different main setups. One's called a buy and sell setup, and then one's called the ones that identify exhaustion, which are going to be your what are called the countdowns. And so we're on a 12 right now on the British pound. You get a 13, which basically means we just need one more down day to close below the low from two bars prior. And what that's going to do is end up triggering the exhaustion low. So it works out very well with the way that the short-term chart's set up, because what you've got here is we're coming into resistance right now. So again, call it 2686 to 127. 200-hour average is right here too. You're probably going to get a pullback from up here, okay? So you get that pullback from up here, and we're going to be wanting to look for a higher low, all right? Probably tomorrow, maybe on Friday, all right? So looking for that higher low lines up very well. Again, 2570 is also a square root level. You've also got, if we were to say draw in a fib, let's just try to guesstimate or estimate, if you will, where we might have resistance. It could be right here. It's probably a little higher, right? So if it's 2686, you're talking your 618 at 2560. If it's 127, you're talking 2564, which is basically the exact week open. So that's my guess. That's why I said on Twitter earlier that you're probably going to see some resistance up here, and then you're going to get a pullback into 25. Let's call it 2570 just to be simple. Okay. Now, this is our bearish fork all the way down. Okay. Are there any levels within here? You can see kind of supports coming off of here that might actually be worth investigating. Not great. A little better, but I want to hit these. I want to hit these. See this? See that low? That low? That low? I want to hit those. So it's subtle, but see those up here, all the way back in April. Okay. Boom, boom, boom. Pretty good idea of where support's going to be, right? So those are the two levels to trade over the next, let's say, day to 2 days, maybe the rest of the week, right? 2690 to 27, and basically 2570. Okay, so this could be really a fantastic, you know, let's call it buying opportunity longer term. Although again, you probably do have potential to get maybe 100, 130 pip drop from 127. Okay, so cable might actually be in play. I have, as you know, refrained from wanting to anything to do with trading the British pound recently, primarily because of this entire disaster that's going on in the UK, right? It's like everyone feels like they have an opinion and they're going to throw it out, and it's just causing rumors and spikes, and then rumors get refuted, and then the market goes the other way, and no one knows what the hell's going on. You just can't trade a market like that, in my opinion. It is, there's always an element of guesswork involved in all of this, right? But it's even more so when it comes to trading the British pound, essentially for a lot of this year, but really over the last couple months. Okay, so not interested in messing around with that at this point. All right, but we do have defined levels now that I would be willing to work with and trade with, again, probably the rest of the week. Okay. Dollar yen. What do we know? We know the market's in a triangle. This is about as clear as it gets. Could it be a bullish triangle? Of course. Could it be a bearish triangle, essentially what we call a consolidation top? Of course, right? We have to be open to both. As I said yesterday, you can't predict the move out of the triangle. In this case, there's a couple issues, right? One is, well, the market's been going higher, so triangles are supposed to break out in the direction of the preceding trend. Okay, fine. But we're also at kind of a longer term resistance. I mean, the market's been trading up. This has been resistance since May of 2017. Okay. So I'm open to either way. We really don't need to worry about that right now. All we need to worry about is basically, I think, 113.70, 113.84, right? 13.84, daily reversal resistance, right? 113.70, month open. All right, just as important, if not more important, the fact that the lower parallel, which was support here, here, and beautiful support, by the way, and here, and even support over here, right? That is now your level for resistance, right? Former support becomes resistance. So real simple here. All I want to do is sell up at 113.70, 113.80. You can throw a stop over essentially 114.05, and you've got a really tight stop, and you're looking for just a move back within this range. Again, don't try to predict the break. You'd probably be looking for support down near the year open, frankly, 112.63. The close of 12.6 is 112.20. Oh, that's the low. The close is 112.68. That's going to be your daily reversal support, and that's where you're looking. So let's just say that 112.30 would be our target from 113.70. You're talking, 140 pips on the downside, and you're talking, 35 pips of risk. So I will take that all day long. All right. So that's the next move in dollar yen if you get it. Right. If you continue to drift sideways in a nondescript fashion, okay, fine. The triangle's still underway. There's just nothing to do. Commodity currencies. This is Kiwi. Took a short, got stopped out basically on the high yesterday. Took another short, and that one's right now working. Whether or not it's going to continue to work, I don't know, but I think it will. I'd actually look for resistance now at 68.70. That's your week open, and it's also this parallel, right? So for how frustrating, it is to be stopped out up here, fine. You do have good levels to work with, okay, at this point. So I would be looking for, a drop back into this beautifully defined 67.75, 67.80 at this point, right? The longer this drags on, the higher the support's going to be. But yeah, that's what I'd be looking for. And, take it from there, right? It's just trade level to level at this point. So we're looking for 67.70 at this point resistance, a drop down to 67.70, and then we'll go from there. That would be an area where, frankly, I'd probably be willing to buy it. You'd have to see what it looks like when we get down there, but you got a lot here. I mean, if we do a 2 legs down, you get 67.83, pretty close. Okay, so you've got a really nice level to look at down here for support, potentially to take Kiwi to the upside. Again, the 4-hour chart, and you can see the 200 average on that chart. It's pretty good, right? It was really good resistance throughout the summer, throughout the fall. Aussie. A bit annoyed here because I was hoping to get a drop down here like, well, yesterday to get the confluence at the right time. That's not happening. So frankly, with Aussie, I'm a little in the dark as it stands right now. I still would be looking at that 71.40 area as potential support. Again, Aussie clearly, coming off of massive resistance here. You can see this is the red lines, the NFP high volume level, and that's continued to kind of reject price here. So even it's doing it right now as we speak. And, I don't have much to do or say about the Australian dollar at this point, right? We'll watch Aussie and Kiwi obviously in conjunction as things unfold. If you were to get Kiwi down at the mentioned support, what did I say, 67.70 or so, at the same time as Aussie dropping into maybe the 71.30, 71.40 area over the next day, it might be an interesting spot for a long. But as it stands right now, as I sit here today, this is about as clear as mud to me. So don't have a lot there for you on the Australian dollar at this point. Dollar CAD. Again, we talked about some of the divergence earlier, mentioned the divergence in the Canadian dollar with RSI on the weekly chart. Let's actually look at that real quick. Okay, so you can see the divergence for the last 1, 2, 3 out of the last 4 days on dollar CAD. We've also got this trend line right here. So this has all the hallmarks to me of a false break to the to the upside. Question, I guess, is do we have another poke? Right here, you can see the divergence as well. So this is the same setup. This is now a weekly. The divergence we have on weekly dollar CAD, obviously same thing that you had in May of 2017. To state the obvious, this doesn't always work, right? I mean, if you would have shorted here without a stop, you'd probably be homeless right now, back in November of 2015. So, you don't want to just take this as, oh yeah, this is, there's divergence, I'm going short, and this is great, this is going to work out. It doesn't always work that way. So it can be a very good indication of a turn or, maybe a coming change in trend, but it's always important to kind of see what happens after. But yeah, we've got 3 consecutive readings here of divergence on dollar CAD on the upside. So I am looking, I'm looking for us to roll over, but it's important to look at the near-term structure. So what's happening right here? Let's get rid of this. Okay. high volume level for Canadian dollars, 32.98, okay? Here's our fork. Back to September, right? Pretty good. Lots of trading on the 75 line, lots of trading on the 25 line. It's gotten more volatile here recently as we broke below, right? To me, I took that as a sign of weakness and that we were going to find a lower high. So that's why we went short with a stop above 32.98. That was a week ago, didn't work out. But now here we are potentially trying to top. So what do? Well, you got to find a bearish structure. Well, here we are at the median line, at the center line. If you rally back up to 33.70, you know, potential for a very short-term short. See if you can maybe get one with a very tight stop and let it ride down to the lower channel line, right? Other than that, let's watch how this develops. If you break below 32.98, okay, then you will have the potential to get some potential weakness. And then you'd want to be selling back into that level at some point, but that might not be for another week or so. So you can see how this is all a process, and we're just trying to follow the market in the sense of we have divergence. It's warning us that there might be a trend change looming, but it hasn't happened yet, right? We have to, you know, we have to go with the near term and see if we can find, you know, little changes of behavior here and there. So, you know, we have a minor change in behavior here, finding resistance at the lower level than we did up here. So that's a very minor change in behavior, but at this point, it's still an uptrend with weakness that's being bought. We don't have anything that warrants a short just yet, but that obviously could change. So as you can see, lots of observation going on here rather than action in my world, right? Trying to prepare for potential trend changes rather than predicting them or calling them. All right, let's look at some commodities. So gold continues to look very interesting, okay? You've got this, let's just call it an uptrend, right? Higher lows, higher highs within the channel. Doesn't get much better. If we get a little weakness, then this is where your support is, okay? It's back on the center line. That's simple, right? You're going to be talking about 1236, something like that. Old highs in that range. So that's where you'd be looking for any sort of, you know, any sort of support should be down here to continue this move to the upside. As I've said many times, the upside corrective channel parallel is about 1260, and you got to break out of that before you can call this an impulse, at which point you'd be looking at 1286, and then eventually the full channel extension, which is going to be above 1300 at this point. So gold looking good. It's a buy weakness market in this here, in my opinion. 1236 is about where you'd want to be buying at 1235, give or take, right? Silver is on the verge of doing something that we haven't seen happen in a long time, and that is actually joining gold and confirming the uptrend in the metals, okay? You can see this high back here, right? The October high. We break that, and what you've got at that point would be, this is the October high over here. Well, the October high is here, but the October 2nd high is way over here. But yeah, what you would do if you break the high in silver, the October high, at that point, you would have a confirmation, right? So gold, this is a great example of confirmation, non-confirmation. So silver is in black, gold's in the color bars, and you know, gold low down here, as we've said, in August, silver low, non-confirmation here, non-confirmation again in November 14th is when you had the euro low, of course. And now silver's on the verge of confirming new highs with gold, which means they're both in an uptrend, which means metals are in an uptrend, which probably means the dollar's in a downtrend, right? which probably means we shouldn't be selling euro, but rather we should be buying it. Now to our long-term chart. $15.20, these old lows, basically, right? $15.15 old lows from July 2017. Just above there is $15.20, which is the long-term magenta line. You get above there, and then it should be home free for silver for a while. All right, so important developments happening here in the metals. And yeah, I'll leave it at that. Copper. Copper with just a drastic, we think that euro and stuff's been bad. Copper's been a crazy consolidation. I mean, even that's ugly. So I would keep abreast of copper just because this really tight kind of, we can call it a triangle consolidation. We don't know which way it's going to break, but classic chartists would call this probably an ascending triangle, right? Upward sloping on the supports, flat on the resistance, would tell you that bulls are, angling for a break to the upside, and you would have a target on this of basically 319, right? You're just taking the width of the consolidation of the triangle, extending it to the upside, and if you break out above essentially 290, then you're looking to 319. Now it's time for some indices. So yesterday we looked at what might be a triangle here, and this is a good time to talk about this right now. I said yesterday that a triangle, if one was underway in the Qs, you'd get another big rally. 169.40s would be a potential resistance level, right? However, 167.12 is where I'd start to question anything, and we're at that right now. So we're currently 167.16. There's a couple reasons why you start to question it here. One, it's just been a level, right? I mean, April high, support in May, okay? And we're there. So, I'd start to maybe think about resistance here. This morning on the open, I actually got out of some calls that I bought yesterday, very short-term calls, just trading very short-term options on the indices right here. Just trying to get out on some gaps, stuff like that. Ty says, please show us where your latest report is. Yeah, Ty. So whenever you go to the website, you go to the homepage here. Okay, all the reports are going to be right here. So all the recent posts. So the swing update right there, 12:11, right? You can see right here is the pending trade, Kiwi, triggered, blah, blah, blah. You get the idea. Okay, so got the charts here. Yesterday's chart, Ty, you've got Qs, we've got the NASDAQ composite and the futures. So there's that. Ty saying you spoke about a bigger report last week? No, no, there was no bigger report. But yeah, so just go back to those levels, or sorry, that report from yesterday, and this is, you know, the levels that we're looking at potentially for resistance in the Nasdaq and whatnot. That's all there is to it. Okay, so I want to show you a little trick though. When you have, I'm going to bring up a different chart here. Hold on. Okay, so when you have a let me go to, all right, we'll actually go real, let's go to like a 10-minute chart. All right, so these are the futures. I want to show you a couple things with the futures chart. When you have like a really drastic kind of V bottomy move like this, right? And then the market, you can see how the rate, you don't even need an indicator to look at this, right? Like you can tell the rate of change is slowing on the upside. And granted, this is a 10-minute chart, so this is very short term, but that's when you want to use your shift fork, okay? Because this is probably going to be too steep, right? You're going to get a much better look. Now on TradeStation, it's called modified shift, but it's actually shift, okay? So this is the S&P 10-minute chart. And you can see that this is probably a much better channel to follow, right? It's flatter. It's going to give you better support resistance. In fact, this is in the overnight session. Look what happened. You trade the median line. You trade the median line. You found support right here on the 25 line. You see how beautiful that is, okay? Your 75 line is going to be right up here, about 2685, and your upper parallel is going to be up here, about 2700, okay? These levels, I bet you, are probably going to offer a bunch of good short-term trades over the next couple of days, right? So this is where you're going to want to be looking for support and resistance with the short-term S&Ps, right? Let's do the same thing, but let's now do it with the NASDAQ. So you can see the V bottom. Now this is a little steeper, and it actually is doing okay here, but again, we're probably wanting to see a little flatter channel. The S&Ps are a little cleaner in terms of the way it's trading within the channel, but this isn't bad either. In fact, you're getting very close to you know, kind of resistance on the upper parallel. So you got the horizontal level here, obviously big resistance back on 12.5, 12.6, right, and 12.7. We've just tagged that. So your horizontal level there, you're getting a pause, but about 68.80 is where you're going to see this come in. Okay, now this is what I would follow for now, especially because look at this is where the open is on the 75 line. You came back, you hit support of the median line. Okay. Mohammed's saying, is this technique good for all markets or trade, or only for indices? Oh no, this is great for everything. Okay, this is beautiful for all markets. I mean, we could look at the New Zealand dollar right now and probably do something with it here, right? So you're trying to find the angle, okay? Now here we're just looking at a regular, you know, we're just looking at a regular channel because this is flat enough, right? You probably don't need to look at a shift fork. But I want to go back to what we were looking at with the NASDAQ. Okay, so here's the NASDAQ. Watch as we get up into 68.80, okay? I would be willing to bet that you're probably going to get something there, and you're probably going to pull back some. Here's the Dow, which is acting like kind of like garbage compared to the NASDAQ, of course, and the S&P for that matter. You can see I've got this right here. Ooh, and here's a good one. I got a red line here, 68.80. Do you know why that's there? Because it's a high volume level. I already can tell you why. So if I go to the NASDAQ futures, Come on. There's so much stuff running on my computer over here. Okay, so here you go. NASDAQ futures. That's the 12-4. So what was that? 12-4 was last Tuesday. And that's the close of that bar at 68.86. That's why I have a red line there. It's the high volume level, right? High volume levels are important. Okay, it's telling us with complete objectivity where the market traded, where the vested interest is in that market. Okay, so you can see high volume levels, how important they are, right? Here was one right here. Once we really broke above it and held it, we were off to the races. Okay, so this high volume level, which is very close, about 30 points, and obviously in today's market, that's could happen before this webinar is over. So that is why we are looking at that 68.80s area. So I bet you that we're coming up on a pretty big level here. As we get into midday, around 68.80 to 68.86 on NASDAQ futures. All right. So what would change my mind on, say, this triangle that we've got going on here, right? What would make me say it's time to get bullish, like for a bigger move to the upside? Well, the obvious answer would be breaking out of resistance here, but I'd like to have an idea sooner than that, right? So here's what I'm getting at. I'm getting at you don't need to necessarily wait, right? What you do is you trade these channels. So like yesterday, for example, I've got puts out to January, but I was buying support on the NASDAQ into by buying, I mean buying calls, right? Because the possibility of a triangle mean we were going to have a rally like this today. Okay, so you can be kind of like both sides. Let the great trades find you, right? You don't need to find them. Let them find you, right? Trade into support, trade into resistance, especially in a market like this. And then, when you get a big move, get out at resistance, get out of support, blah, 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 blah. Eventually, you'll catch a runner. From an analysis standpoint, I think this is China. I still think this market is really key to watch, obviously. You've got what could be a big base in China, right? This was 12.3, 12.4. You can see the big failure on the resistance line. If you can break out through resistance on FXI, again, this is FXI, this is the Chinese ETF, that would be the best indication to me that something has actually changed in the marketplace, right? There's something sustainable happening. We have a bigger rally underway. I'd probably be more likely to buy something like this than I would actually buy maybe US shares at this point, just because we've seen a relative strength in China over the US. And if you can see that, you just do FXI divided by SPY, right? False break to the downside. Nice little bottom. And that might mean that you actually get Aussie to come out of its base, potentially. Okay, so lots going on, right? I'm going to leave it there, and I got to run. I want to get this archive for you. Again, ECB tomorrow, right? I know everyone's jacked up for that, and no predictions, but seeing a lot of signs that we might finally be turning the corner in the dollar, right? The gold stuff, the silver stuff, the British pound and the DeMark countdown and all that. If there's one thing I can leave you with for the next day or so, it's really to pay attention to the short-term British pound levels, right? That's going to be, let's call it 127 and about 125.70 are the two levels I would watch, right? with preference, of course, on probably buying a dip for a bigger trade, but short term, you could certainly get a pullback off of 127. Okay? All right. So that's it for me today. Again, everyone, thank you so much for your time as always. And I hope you have a great rest of your week and a wonderful weekend and a great last half of December. But I'll be with you again next week, of course. All right. Have a good one, guys.